welcome to Aspire to Retire. I'm your host, Cheryl Nelson. I'm here with Ralph and Tim Short, along with Scott Earhart, all from Welcome Home Financial Partners. Good to be here with you guys again.
Good to see you, Cheryl.
It's always a good day when I see your smiling faces, right?
Thank you.
Oh, look, they all smiled when I said that. Well, whether you are a new investor or a seasoned pro, today we will discuss financial strategies to help you build a retirement nest egg that will stand the test of time. We're here because we want to help you secure a comfortable and financially stable retirement lifestyle. So to start, guys, can you give us an overview of the importance of investing and its role in building wealth over time? And over time, I think, is kind of the key phrase there.
Yeah, it is. So the earlier you start, the less money you have to contribute for you to create that big pot of money, right?
Mm-hmm.
So when we get to retirement, we're in charge now of our own paycheck. So how are we going to accomplish those goals? So when you invest, and there's so many different ways you can invest, but when you invest, the sooner you start, the more money you have to put in, whether that's a 401k, whether that's an IRA, whether that's in just a traditional brokerage account. There's so many different things that you can do, but the sooner you start, the less money you have to put in, depending on where you place the money, how you have it invested, is going to determine your outcome.
And with that, I mean, you are absolutely correct. The sooner you start, the easier it is, but that doesn't mean if you're a little later that you shouldn't start. It's important to get started no matter where you're at in your journey towards retirement. So if you are a little later, if you're 45, if you're 50, still get a plan together. Let's talk about your goals. Let's talk about where you want to be and see if we can build that roadmap to get you there.
But I think there's two other points that you need to make sure that they are aware of, Cheryl, is this. Number one is the earlier you start, the less money it takes if you're trying to accomplish the same goal at the end of retirement. Or the other thing is everybody's going to be different. Your goals are completely different than the next guy. So you just can't say that you need to do this because I've been told by somebody else. What are you trying to accomplish?
Right.
Is it that $1 million at age 65, or is it only $300,000? Because you don't need that much money.
Right. I think we all have that friend who is the financial expert. And I'm just going to say with quotations, because do they have training? And maybe they are an expert at it in their own way, but what's good for them may not be good for you. And I think that's the point you're trying to make, is we all have to look at ourselves as individuals. So why should individuals, regardless of the level of experience, consider including investments in the financial future and retirement?
Because sooner or later, just like we talked about before, is that you're going to be responsible for your own paycheck. If there's no money there at the end of the time, guess what? You may not have a good retirement. You may not be able to pay your bills. You may not be able to do the things that you've always dreamed about. Because if you don't start doing something, nobody's going to be there, at least in my world, because I do live in the real world, not in it.
You're in the real, you're not in a bubble?
He's not in the metaverse.
That's a thing, apparently.
Yeah, but you're responsible for that. So all of a sudden, you got to understand that.
Well, what happens though? Let's say doom and gloom, you don't save for retirement, you run out of money. Then what happens? Who takes care of you?
Well, more than likely, you're going to continue to work. And I have not met one person that wants to work for the rest of their life. Now, if somebody wants to live 80, 90, maybe even 100 years old, they don't want to work until they're 100 years old.
No.
So if you're not investing, if you're not saving, you're not going to be able to retire, right? Social Security is here today. We don't know what tomorrow brings, but more than likely, that's not going to cover your expenses, your needs, and your wants. And when you retire, there are wants that you want.
So true, and you don't want to have to go back to work after you retire because you run out of money.
Unless you choose to.
Unless you choose to. Nothing wrong going back to work if you want to do that.
That's right.
Yeah.
But the other thing to say is, have you ever met somebody that you knew that only had Social Security in retirement? Does he have the life that you want?
No,
And
not
that's
taking vacations.
That's the issue.
Right, absolutely. Okay, so can you explain then the concept of risk tolerance and how it affects one's investment choices? Because I know we all want to see our money grow, but if we do that and it grows fast, isn't there also the risk that it could fall fast?
Yeah, there's always risk, right? And depending on how old you are and how close you are to retirement, that's going to be one big factor for your risk tolerance. So when you're 20 years old and you're just starting off, you're going to have a lot more risk when it comes to the stock market. But there's different risks. It's not just the stock market. So when you're getting closer to retirement, you might have to throttle that risk down a little bit and not have all of your assets linked or into the stock market. So there are things that you've got to take a look at, and that's part of the process that we have. But when you get close to retirement, if you had $500,000 and all of a sudden the market has a bad downturn like we did in 2008, and it felt like overnight, it was down almost 50%, are you going to be able to retire the way that you want to? Probably not. So you're probably going to continue to work. And then at that point, how long is it going to take for you to recoup, right? And that's the big thing. It's all about timing. And guess what? Nobody can time the market. So that's why it's very important to sit down and look at your risk factors, because if you're in the market 100% and you're getting close to retirement, if we do have a bad downturn, either you're not going to have the retirement that you want, or you're not going to be able to retire when you want, or maybe you might not ever be able to retire.
So one of the things I would say to somebody is this. Back in 1987, yes, I'm an old dinosaur, when I first got into this business.
I didn't call you that.
I had a person I was talking to with a retirement program. Now, he was 80 years old. He was fixing to retire within a year. And he was taking a look at different investment options that was being offered to him through his employer. And one of the things he asked me, he said, I think this is the way I'm going to go. And I'm like, looked at him and I said, I know that's the hot ticket item that everybody talks about. It wasn't crypto like it is today.
Oh gosh.
But it was another type of investment. And I said, that is for somebody that is 20 years old, not 80. And guess what? This was in April of '87. He decided to go with that investment that was made for a 20-year-old. And all of a sudden, '87 Black Monday came along. He lost 70% of his investment. And what did he do?
Call you.
He sold out.
Oh no.
The worst thing he could have done. So now instead of having 300,000, he had somewhere around 100,
gosh.
and he couldn't retire.
Oh, I hate that story. That's a bad story.
It is
Oh, it
bad,
is.
but
That
it
was real life.
But it's a reality.
Yeah, and it happens all the time. And people, I kind of use the little phrase that as soon as you hear about that hot ticket, it's already too late, right? So people, when they start hearing about Bitcoin was already at the top, then it goes down. Then there are different market fluctuations, but you can't just throw your money into something, one, that you don't understand, because most of these hot ticket items, nobody understands how they work. They just heard about it from their brother or their neighbor or whatever,
Right.
and they just buy into it. And the next thing you know, the market goes down and now they sell out, and that's the worst thing that you can do.
Absolutely. All right, we have to take a break in a minute here, but first, a special offer for our viewers.
We do, Cheryl. So the first 10 callers who have saved $250,000 or more, pick up the phone, give us a call, 833-897-4845. We'd love for you to come into the office where we'll personally sit down with you and create your very own retirement roadmap. Take a look at those different risk factors for you as well. And best part is, Cheryl, we'll do it on a complimentary basis.
Did you hear that, guys? Complimentary. So pick up the phone and call that number right there on your screen. If you don't feel like chatting right now, just get your phone and scan that QR code and you can make an appointment and talk about this later. So if you'd like some personal advice and retirement planning and more, just do that. Call that right now. And in the meantime, don't go anywhere, because coming up next, we will discuss the different investment options. Stay with us.
Imagine the future you've been wanting all along. A world where your retirement income is covered and you don't have to worry. Your financial assets are protected, and you have an experienced team fighting every day to grow your assets. Imagine a company creating tax strategies and legacy plans to make sure your loved ones are protected no matter what happens. At Welcome Home Financial Partners, we're an experienced financial team with the right professional licenses and an unbreakable commitment to making our clients feel like family. Here you'll find determined, friendly faces in a world filled with obstacles and problems. We help plan your retirement income to ensure you won't run out of money in retirement. We build in protection to make sure your assets are covered on all sides. We focus on growing your wealth to combat inflation and rising cost of living. And we design tax strategies to help you avoid paying back what you shouldn't while protecting the people you love. Our team never stops fighting for you. With an unparalleled work ethic, we work hard because we know your future depends on it. We're proud to help you choose the life you want to live in retirement. Welcome to your financial future. We're so glad you're here.
Welcome back to Aspire to Retire. We're talking all about investment strategies today. So let's get to our next question here. Seasoned investors often face market volatility. How do they adapt their strategies to navigate turbulent times? This is a good question here because seasoned investors, they probably have some way to know how to respond to this, but the rest of us, I don't know what to do.
Well, the key on being able to adapt is diversification. That's the
Okay.
key word that a seasoned investor or a financial professional would use in this situation. And not just diversification of the investments itself, uncorrelated assets, things like that, but diversifications of the type of investments. Maybe you need some things in your portfolio that don't have any risk or have significantly buffered downsides to mitigate any risk that some more open market investments might have.
What doesn't have risk?
Well, we can use all sorts of fixed products. You can use insurance products. There's dollars at the bank even. Might not be the best place to earn anything, but
I
it's an
see.
option for you. So
Okay.
diversifying your risk portfolio is going to be a big part to help you adapt to a changing marketplace and landscape.
Well, my question is this, what is a seasoned investor? Is it somebody that just got into the market yesterday, but he went up about 20% today and he thinks he's a seasoned investor, or has he been in the market 20 years? And
Yeah.
so those are some questions that we have to sit down and talk to people
Yeah,
about
true.
because, you know, everybody's experience level when it comes to investing is a little different.
Yeah,
okay?
yeah, you got to define what that is, and everybody has a different outcome they're looking for.
Yeah, and a lot of people, they get caught up in timing the market. Well, nobody can time the market. We've talked about that,
Yeah.
several times. But you've got to be patient with the money you put in the market. No matter where you've got it, you're going to have some sort of risk. Everybody thinks about the stock market, right? Because that's what scares us. We don't want to put $100,000 in the stock market. It goes down 50%. Now we only have 50 grand, right? We don't want to do that.
No.
But no matter where you place it, there's going to be some sort of risk attached to that money, and we got to determine with how much, what kind of risk we want to take with it. But people get so caught up in timing the market to where, back to the story Ralph was talking about earlier, if you lost 60, 70% of that stock or mutual fund or whatever the case may be, and you sell out, then what, right? We always talk about emotional investing. We've always been told you buy low and you sell high. Well, when is it low and when is it high?
So, okay, wait a second. Is this like a slot machine then? When you lose a bunch of money, are you supposed to stop playing or do you keep playing?
Well, I don't play the slots. Go ahead.
Oh, I like how
So-
you deferred. You're like, nope.
So what I would say is people need to understand you need to have buckets of money per se or for investments. So this bucket of money for current income, current expenses, things of that nature. Then you've got talking about retirement. So that's longer term. So if you've got 20 years for retirement, that's a different way that you would handle those investment strategies. Then you've got some things that you might save for 5 to 10 years from now, whether it's college education for your kids or grandkids, or whether it's a new car. So those are different strategies options that we would talk to people about where to place that money. It's just not, when you say investments, everything needs to go in the stock market. It's really according to what your goal is with that money. Would you
Gotcha.
agree?
Yeah, because every dollar is going to have a different purpose. When you structure it in that manner, not every dollar is going to operate the same way, right? So we go back to the patient money. If you have it in the market, you've got to be patient with it, because the last thing you want to do is stick $100,000 in there, it drops 50%, and then you sell out at 50 grand.
Yeah.
So, but you never want to stick everything in one basket.
No, that's good advice there. And what about staying informed with economic trends and global events that can impact your investments? Because people might be following that every day, and that could push them to make rash decisions. So how are you not supposed to do that?
You are supposed to hire a financial advisor,
Yes.
a financial professional, someone like us that it's our job to keep up to date on market trends, keep up to date on things that affect the open markets, affect different things, and let us help you stay informed. I'm not saying don't go out and do your own research, but when you, as Tim said earlier, when you hear about the hot ticket item or the hot button issue, it's already too late. If you're reading about it on some financial blog or some talking head on television is already telling you about it, the move has already happened. The event has already happened. Let us help you stay in front of it.
Yeah, in the media too, when you cut on whatever channel you're watching and they're giving you some sort of financial advice, they're pushing you into one way, no matter what it is. I'm not saying it's right and I'm not saying it's wrong, but there's going to be a biased opinion there, right? So you've got to make sure that you do your own research and you hire yourself a seasoned financial professional.
But I would also say, do not allow yourself to have knee-jerk reactions, because that's the worst thing that you can do.
Yeah.
Because if, like Tim said, if it drops 50%, what's the first thing you're thinking about?
Yeah.
Sell out
Yeah,
because
running.
I'm lost.
Right.
So that's not the best thing to do, because guess what? The average over the last 20 years for the S&P 500 index has been somewhere around 7.5 to 7.9%. Okay. However, for the investor, the average investor, somewhere around 1.9 to 2%. So what's the difference? It's called emotional investing. They sit there and buy when it's high, sell when it's low.
So I was going to ask you, so you have to keep your emotions out of it?
Yeah,
In a
you
perfect
have to.
world, you keep
In
your
a
emotion.
perfect world.
It's hard to do. It's hard
Right.
for a financial professional to do. It's hard for individuals to do. But taking emotion out of investing and looking at it as the true dollars and cents, and how would this action affect your long-term goals that we're trying to help you achieve, your retirement goals. So keep the emotion out of it. Let us help you. That's the best advice I can give.
And nobody's ever walked into the office and said, hey, I want to lose money, right? Nobody has ever wanted to lose money. It doesn't matter how old you are, how much you have, what stage of life you're in.
Right.
Nobody wants to lose. So if we go back to like patient and inpatient money, if you've got money that's protected and you've got $100,000 in the market, going back to that $100,000 again, and you lost 50%, emotionally, that's a lot easier of a pill to swallow, knowing that you've got another portion over here that's not lost
True.
50%.
You didn't lose it all.
Right. That's why we always take a look at the whole picture, and you need to think of it as the whole picture, because if you have your money in the market, you've got to be tolerant to the market risk.
But you, as what I would consider middle class America, they need as much help to understand these kind of concepts than anybody else, because they've never been trained at doing this.
We don't learn this in school,
That's
and I
right.
don't know why.
And we didn't get it from our parents either, because they didn't get trained to that unless they were in the financial world, banking world, things like that. So that's
Exactly.
the other thing I always try and tell people. Do not beat yourself up because you don't have that $1 million goal yet, because guess what? We didn't have access to the things when we started work, or when I started work, that we have available to us today.
So when is a good time then to seek a financial advisor
Now
for everybody?
for everybody.
Absolutely.
Yeah.
If you have a financial advisor, it doesn't hurt to get a second opinion. If you're doing it on your own, definitely get in front of a professional, get their opinion, get their assistance, our assistance in helping you achieve your goals.
Yeah, and we've been seeing it a lot recently, where there's a lot of people who've been doing it themselves, and they're now getting close to retirement, and they're giving us a call, and they're like, hey, I've done this. This is what I've saved up for. Now I want to maybe even throw the keys over to you, but I want your opinion on this. What am I doing right? What am I doing wrong? What do you think? So we kind of go through the process, and a lot of times they end up becoming clients, and they're really grateful for it, because it's a second set of eyes on it. It's another perspective, because when you're trying to accumulate, right, we've got to make sure we do certain things, and when we're taking distributions, we got to make sure we're doing different things.
So now is a good time to call. You heard it right here. We have a special offer for us, don't we, Tim?
Yeah, we do, Cheryl. So the first 10 callers who've saved $250,000 or more for retirement, give us a call, 833-897-4845, or pick up the phone and scan the QR code at the bottom of the screen. We'd love for you to come into the office where we'll personally sit down with you and create your very own retirement roadmap. And the best part is we'll do it on a complimentary basis.
Good stuff there. So yes, it is time for that commercial break, but keep those questions coming. Take advantage of these guys, our professionals. They are right here. Call for advice now. Once again, 833-897-4845, or use your cell phone and scan that QR code on the bottom of the screen. You can set up your own appointment. Coming up next, my favorite part of the show, will feature some of your burning questions. Stay right there.
It was the longest running bull market in history. Everything was looking up. While inverted yield curves pointed to a recession, the market kept going. And then, if you're planning to retire soon, that could spell bad news for your returns. Our team can help you better withstand the bear market. Now more than ever, you need a financial professional to stand with you. Visit our website to learn more about our services. You can call or email our office to schedule your complimentary consultation today.
Welcome back to Aspire to Retire. It is our favorite part of the show. Time to feature some of your questions. So we're going to start with Mark from West Point. Mark says, I have a pension through work. First of all, lucky duck, let me just say that. And they're offering a few different payout options, but I'm confused as to which option to take. Could Welcome Home Financial Partners help me understand what's best for me?
Absolutely, we could. We've worked with many of our clients currently have pensions, have worked hard and been lucky enough, worked for good enough companies that they offered them. And it can be confusing because there's all sorts of options that are available in many pensions. Is there a lump sum distribution? How do you take it if you are taking the payments? Do you take it single life? Do you take care of your spouse? Do you do it over a certain period? So I understand Mark's question. Best thing I could say would be scan the QR code, give us a call. Let's sit down, bring your paperwork in. We'll certainly explain all of those options to you.
But Scott.
Ralph.
Doesn't the company help you make those decisions and tell you what you need to do?
Maybe
The company you work for? I have yet to see that. I have yet to see that. And anybody that does tell me they're getting advice, it usually comes from the person they're working shoulder to shoulder with. Correct. And that's definitely not the place to be taking the advice from.
Yeah, and to Scott's point, I just recently met with somebody. They actually had 16 different options on collecting their pension. So it does get very confusing, and they don't really know the ramifications of doing it. And guess what? As soon as they collect that first check, there's no going back. So you got to make sure you get the right choice right off the bat. And the only way we can give you those recommendations is going through that process. Let's take a look at the whole picture.
Yeah, got to know what you're doing. Next is Dan from Orange. Dan says, I've always been told to invest in the markets, but now that I'm nearing retirement, I'm scared a downturn will wipe me out. What advice would you give someone like me? And I think we talked about this earlier. Does it involve buckets?
Yeah, it does. So, and I would agree. If you've got all of your money in the market and it takes a bad downturn and you're close to retirement, once again, you might not be able to retire the way that you want, or retire at all, or retire when you want to. So we love to sit down with you in the office where we can create those retirement income strategies for you. And maybe it's the bucket strategies, but let's take a look at what you're currently doing, how much you've got saved up, what your income is. Are you fortunate enough, like the previous caller, to have a pension? So these are all things that we want to take a look at.
Okay. Dennis from the West End says, I have a broker that I hear from once a year and I keep paying fees out of my account. What are they doing for me?
That's a really good question.
That is a good question.
That's a really good question. I think I know how the three of us will answer this question, but Dennis, what value are you finding from your broker? If it's just a phone call once a year, hey, thanks for your account, you're probably not getting a lot of value.
Right.
We need to sit down. What are you looking for out of a financial professional? What are you looking for out of your investments? And what value could we bring to the table so that you have a better experience than what you have right now?
And to add on to that, and this is something I'm passionate about because we hear about it all the time. What do you charge? What do you charge? What do you charge? We hear it all the time. There are people out there that say, hey, we charge X percent, and it's really low, right? But the funds that they're selling to that individual is going to be really high. And a lot of people don't know these things because they don't do their own investigating. So it's, once again, about the big picture. So if somebody's only charging you X percent and it's lower than other advisors, there's a reason for that, right? So you've got to take a look at the whole picture, which once again comes into the second opinion.
How do you look at the whole picture, though, if you don't know what you're looking at?
Your statements, any of the things that they give you, that's things that we take a look at.
Oh, so bring everything to you guys, for example.
And we've got a list, so if
Okay.
you call in, we'll furnish you with, hey, this is what we want to take a look at based off what you want to accomplish. Bring all that stuff in and we'll take a look for you.
Okay. Brian from Locust Grove says, my neighbor told me that his retirement fund is a life insurance policy. Is that possible?
That is one way that most people don't understand. There is ways that you can structure a life insurance policy to help you in retirement, okay? It's not to say there's a qualified account, qualified retirement account where you can take it off of your income. However, it will help you to have income come into you. And it's just according to what kind of life insurance it is, and that's what we talk to people about. There are ways of doing that. But understand that sooner or later, you're going to be able to get money out without any tax consequences to you. Or other thing is, let's say that you have a policy that you can more or less transfer over to your beneficiaries without having to pay any taxes on it. And that's the key thing. What are you trying to do?
Well, for Brian, what I'd say is yes, it's absolutely possible, and it can be a very good vehicle for you, but you need to be talking, if that's something you want to look at, you need to talk to a financial professional, because that is a very intricate way, a lot of moving parts to get that set up and make it work properly. So you need to have a financial professional helping you develop that plan and implement that plan.
And there's very few financial professionals that can really discuss life insurance within this as far as retirement programming.
You guys do it all, don't you? You can talk about all of this.
We try.
Oh, so humble. All right, David from Petersburg says, I put my money into my retirement plan at work. Should I be doing anything else to prepare for retirement?
I would say to him, yes, because there's other things that you can do. Make sure, number one, that if you have a program at work where you're going to be able to have funds from your employer coming in, max it out. If he says 3%, you put in 3%. After that, then sit down and see how much disposable income that you have left over to take towards other retirement plans. Would
Right,
you
and this
agree?
goes back to the numbers. If they're willing to match you 3%, put in 3%. But if you've got more that you can put into an account, maybe not put it into your 401k. Maybe put it into an IRA, or maybe something else that could be tax-free in the long run. So this is why we always have that process of, okay, if you've got X amount of dollars coming in and X amount of dollars coming out, maybe that difference we could take and do something differently.
I see. All right, so put it in another bucket maybe. Do something else with it. I like the bucket thing. Or maybe we could use coffee mugs. How about that? All right, special offer. One more time, Tim.
Yep, so the first 10 callers who have saved $250,000 or more, pick up the phone, give us a call, 833-897-4845. We'd love for you to personally come into the office. We'd sit down with you, create your very own retirement roadmap, and Cheryl, the best part is we'll do it on a complimentary basis.
And these guys are super nice to hang out with also, I will say. Look at them.
Thank you.
They're all
That is so
laughing.
sweet.
Yeah, I mean it. I mean it too. You really should. Get that QR code, scan it, give them a call. That wraps up today's show, guys. Thank you so much for joining us on Aspire to Retire. Next time, we will discuss the specifics about retirement planning and investing. We'll dive even deeper. So call right now. You could be featured on our next episode. On behalf of all of us at Aspire to Retire, I'm your host, Cheryl Nelson. Have a great day.